Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about recalled questions from exam date 15th October 2023, Accounting and Financial Management for Bankers, JIIB paper number 3. Now presently we are conducting for online classes for JIIB, CAIIB May and June 2024 examinations. Interested members are requested to contact on this number. Recalled questions 15th October. This is the latest examination. Question number 1. Gold and silver investments done by the bank, where it is going to be classified in bank balance sheet schedules. Gold, it is going to be parked in investment schedule, schedule number 8. Gold means it will come under investment schedule number 8. Silver, it will come under other assets, schedule number 11. So gold is investment schedule number 8, silver other assets schedule number 11. Difficult question. LRAB, question number 2. Liberalized exchange rate management system. Liberalized exchange rate. Reserve Bank fixed the buying and selling rates and the market would remain within that ceiling at that time. Fixed by RBI. Presently, that it was not there, it is not there. Presently, market demand and supply forces are going to be determine the buying and selling rates. Further, we are using direct quote for calculation. $1 is equal 83 point. Example I am telling, direct quote you are using since 1993 onwards. $1 is equal to 83.15 rupees. Where dollar is constant, rupee value is going to be changed under direct quote. Dollar is same, daily it is going to be changed. 3. Public issue over subscription. When a company total application received in compliance with a public issue, larger number of shares than what the company proposed to issue. Means whatever the company proposed to issue, the company is getting more application than the proposal. In such case, the company cannot issue more shares than what is offered. Such a situation is called as over subscription. Means getting more application than the company proposed to issue. Now 4th, types of GST in India. GST in India. Central GST, state GST, integrated GST. 3 types of GSTs are there. GST late filing penalty 18%. GST returns. GSTR1 turnover, aggregate turnover more than 1.5 crores. GSTR3 less than 1.5 crores. Interest on delayed payment of tax, GST is 18%. Delayed payment 18%, that is the delayed payment. This is question number 4 is over. Now 5. Question number 5. Types of audit report to be issued by statutory auditors of the branches. What is statutory audit report? B. Long form audit report, LFAR. Long form as per RBI guidelines. Tax audit report. 3 report they are used. One is statutory audit report, LFAR, long form audit report, tax audit report. Question number 6. Limitations of ratio analysis. What are the limitations, weaknesses, disadvantages? In the ratio analysis, comparative study is required. Comparative study is required. Ratio alone cannot give information. So you have to compare with others. Ratio alone are not adequate. In the analysis, ratios only cannot serve the purpose. Window dressing is also possible by increasing the figures. Problems of price level changes cannot consider ratio analysis law. Price level changes. No fixed standards for comparison of ratios. There are no fixed standards. Non-financial charges. And non-financial charges means management quality, inflation, deflation. These are non-financial charges cannot take consideration by ratio analysis. important question, little bit difficult also. Question number 7, zero-based budgeting. Zero-based budgeting is a method of budgeting whereby all activities are reevaluated each time. So every time a fresh budget. Each item is going to be evaluated from zero, from minimum level every time. That is called zero-based budgeting. 7. 8. Escalation clause in construction contracts. Escalation contract. These are examination questions 15th October 23. Escalation clause in construction contracts. This clause provides that in case of prices of material, contract material, labor specified in the contract changes beyond a certain specific limit over the prices prevailing at the time of signing the contract, means whatever the price level, material level, prices, labor level quoted in the contract changes, increases beyond a specified limit over the prices prevailing at the time of signing the contract. During the execution of the contract price may be suitably adjusted by taking into consideration of the price level changes. So it is going to be benefited to the contractor. That is called escalation clause benefit. Question number 9. Theories, approaches on capital structuring. First you have to know capital structuring means. Capital structuring consisting of own capital, equity, net worth or capital, preferential capital reserves plus long-term loans, long-term debt. That is called capital structuring. What are the approaches for calculation of capital structuring? Net income approach, net operating income approach and traditional approach. Very, very important this is. First you have to understand the cost capital status. 10. Forex forward point calculation. Forex forward points means forward rates calculation. How? Formula spot rate into interest rate differential between INR and the forward rate which you are going to calculate currency into forward period, number of days, 3 months, 6 months, 1 year, that period, divided by number of days in a year into 100. Normally number of days in a year we are taking 365. This is the forward point calculation. Spot to interest rate to this. Spot rate to into this interest rate forward rate period divided by now. Very, very important difficult questions. 11. Transfer pricing annadu. This is also difficult level. I chosen out of available questions difficult questions only. Transfer pricing refer to the pricing of goods and services within a multi-divisional organization. Multi-divisional means multi-branches. Multi-branches. Companies having more number of branches at various places. Particularly with regard to cross-border transaction also. Cross-border means between various countries. This. What are the traditional old methods for transfer pricing calculation? Comparable uncontrolled price. Comparable uncontrolled price method. 2. Cost plus profit. Cost plus means some method. Resale price method. These are old methods. Comparable uncontrolled, cost plus. Non-traditional methods. Profit split and transactional net margin method. Profit split to net. Non-traditional methods. Question number 12. MPB, Maximum Permissible Bank Finance Tandon Committee. MPBF, Maximum Permissible Bank Finance Tandon Committee. Second method of lending. What is the borrower's margin? 25% of total current assets level into 20. That is the margin under second method. 13. General question. Cost of goods sold. Formula. Opening stock plus purchases plus direct expenditure minus closing stock. This is the formula. Direct expenditure means what? Wages, power, fuel, transportation charges of raw material. All these items will be reflected in direct expenditure. 14. Difficult question. Long-term uses of funds. decrease in equity, decrease in equity, decrease in reserves, decrease in long-term borrowings, increase in non-current assets, fixed assets, and the long-term uses of funds. Decrease in equity means payment, reduce the preference share capital paid, decrease and level. Decrease in reserves, company has utilized some part of the reserves, that is there. Decrease in long-term borrowings, decrease means repayment of long-term borrowings. These are uses of outflow of funds. Increase and purchase, increase the level of fixed assets means purchase of fixed assets. Increase means purchase of non-current assets. This is a long-term uses, inflow, long-term outflow of funds. Uses means outflow of funds. Important question, difficult question, and that is differences between marginal costing and absorption costing. This question also asked. Marginal costing, absorption costing. Marginal costing, only variable cost can be taken into consideration, marginal costing. Whereas absorption costing, variable cost, fixed cost, both it will take into consideration. Profit calculation, fluctuation with sales value changes. The profit most stable because it is taking fixed cost also. Stock valuation lower as only variable costs are considered. And compared to absorption costing, stock valuations are lower. Where? Higher because fixed cost also they are appropriating. And break-even point easier to calculate under marginal costing because we are taking into consideration of fixed cost compared due to fixed cost consideration. Main I am telling, main point for 1 mark के लिए marginal costing only taking into consideration of variable costs. Absorption costing only taking care of considers both variable cost and fixed cost. Variable cost means salaries, wages, raw material prices, power, PL, these are variable. Fixed cost means depreciation, salaries, insurance, term loan interest, these are some variable. Fixed cost, constant. Difference between marginal costing and absorption cost. First difference, major difference, marginal costing only variable, absorption costing only variable and fixed. Differences between future contracts, forward contract, derivative exam, I think, derivative contracts, futures contract to forward contract. Main difference is future contracts are traded on stock exchange, forward OTC, not between two parties, non-exchange traded. Since it is exchange traded futures, standardized amounts, fixed maturities, initial margin required, MTM valuation is required. Hey, flexible maturities, no standard amounts traded on OTC, this. What are the objective of derivative? Risk management. Risk management. Derivative defined under RBI Act section 45. Where derivatives are defined? RBI Act section 45. Derivative value depends upon the underlying assets. Derivative value depends upon the underlying asset. Derivative settlement at a future date. Future date. For entering into derivative transaction, it requires no investment or very less investment. The derivatives. It is settled on net basis. Net basis. Net basis. Then last point. What are the major differences between finance lease and operating lease? Very, very important for all the 4 purposes of JIIB. Financial lease defined accounting standard 19 Ind AS 116. Ind AS. Accounting standard 19 Ind AS 116 financial lease. Financial lease. Under financial lease, lessor and lessee agree that ownership of the leased assets will be transferred to the lessee at the end of the lease period. So asset is going to be transferred to lease. Financial lease is generally for whole life, longer period. Whole life of the longer period. Operating lease is only for shorter period. Shorter period. Revocation, cancellation of financial lease cannot be revoked. Lease cannot be revoked. Operating lease contract is revocable, can be taken back. Maintenance finance lease, all the costs relating to maintenance, taxes, insurance borne by the lessee. Maintenance cost. In operating lease, all costs are borne by the lessor and asset owner. Obsolescence risk, the lessee has to bear the risk of obsolescence. Here, lessor has to bear the risk of obsolescence. Option of purchase. In a financial lease contract, provide for the option to purchase the asset at the end of the contract by the lessee. No such option under operating lease. These two questions also they had asked recently. What is the meant by wet lease and what is meant by dry lease? In a wet lease is one which the lessor operates the equipment and is responsible for its insurance maintenance. In a dry lease, all these functions and responsibility of the lessee, aircraft without crew. Once again, wet lease in one which the lessor operates the equipment and is responsible for insurance. Lessor everything he will take care. Insurance, maintenance, example aircraft plus its crew member supply, its maintenance, insurance, everything taken by lessor. Whereas in dry lease, only he can give aircraft without anything to the lessee. Adi. All the functions are maintained by lessee. Dear friends, thank you very much for watching our YouTube channel. The participants we are going to appear for May and June examinations of JAIIB, CAIIB, our online classes are in progress. Interested members are requested to contact on this given number. Thank you very much for all.